Welcome to Counters. In this lesson, we'll be looking at the asset disposal, mainly how to account for the disposal of a fixed asset. Asset disposal involves the removing of assets from the accounting records, that is the balance sheet. When an asset leaves our premises, when we get rid of it either by selling it or exchanging it for another asset or trading it in or giving it away, we also have to get rid of it from our books, and we do that using the asset disposal. So we have an example here which will help us understand what the asset disposal is all about and how to account for it. It tells us an old printer bought for 120,000 rand was sold for cash on the 31st of August 2015 at carrying value. Accumulated depreciation on this printer was 38,400 on the 1st of March 2015. Depreciation on equipment is written off at 20% per annum according to the diminishing balance method. And here are the requirements. It tells us that we need to prepare the following accounts: equipment, accumulated depreciation on equipment, and asset disposal in respect of equipment sold on the 31st of August 2015. Now, there are a few important things that we need to note when doing an asset disposal. We need to pay very careful attention to how much we bought the asset for, when we sold the asset, the actual date at which we sold the asset, the accumulated depreciation given, mainly the date at which we are given the accumulated depreciation, and also the accounting period with which we are talking about. Another important thing is to note the depreciation that is used, the depreciation percentage that is used, and very importantly, the method of depreciation, so that we can calculate the depreciation accurately. Now, in the link in the description below, there's another lesson on the differences between diminishing balance method and the straight line method, which will help you understand the two methods and enable you to calculate depreciation well. There's also another one which explains depreciation terms, which will be very important in also understanding a lesson like this. So let's go ahead and take a look at this example and do this example. So let's see what general entries are we asked for. We asked for equipment, accumulated depreciation, and asset disposal accounts. So let's do the T accounts. The first one is equipment. The first thing that we need to record with equipment for what we sold is the balance brought down. What amount are we given? The asset that we are selling, we need to record the actual cost at which we bought the asset for. And it tells us that the old printer which we sold was bought for 120,000 rand, and that is the balance that we are given. So we always record the cost at which we bought the asset for, not the carrying value of the asset. That is the first thing that we do. We put it on the debit side because we know our assets increase on the debit side. And the next thing that we do is to credit that full amount on the asset disposal. So the asset that we are disposing, we record the actual cost on the debit side like we've just done, and then we go to the credit side and we record it under the asset disposal with the same amount. That means we are getting rid of the asset in our books. Now, in this example, they didn't tell us of other equipment or other printers which were left in the premises. It was just that short example with the printer which we are getting rid of. So that is all we have, and then we close off the books here. So we see that the debit balances with the credit. Let's move on to now accumulated depreciation on the equipment. We do the exact same thing, the balance brought down. Now we know that accumulated depreciation is a contra asset account which increases on the credit side. So we put the balance brought down. How much are we given for equipment? It tells us that 38,400 rand, that is the information that we got, was what we had for accumulated depreciation at the beginning of March. And that is the first thing that we record. Another thing that we need to record is the depreciation for this current period, from the beginning of the period to the time at which we sold the asset. So we need to record the depreciation. What is the amount for depreciation? Well, we have to calculate it, and this is where many people get it wrong. Many students get it wrong, knowing how to calculate it well and how to count the months at which we are calculating the depreciation. But let's look at it. I've written down the formula here, the calculation of the depreciation for this current period. Well, we bought the asset at 120,000 rand. Remember, we're using the diminishing balance method, so we have to deduct the accumulated depreciation until the beginning of the period. So 120,000 rand minus the 38,400 rand accumulated depreciation multiplied by the 20%. per annum of depreciation, and then we have to multiply that by the number of months that we had the asset from the beginning of the period. Well, it says 6 over 12 months. How did we get 6 months? Well, let's calculate. It gives us the accumulated depreciation at the 1st of March 2015. So we need to calculate from the 1st of March 2015 until the time at which we sold the asset, until the 31st of August 2015, to know what the depreciation for this current period is. So from the 1st of March, we count March, because it's the beginning of March to the end of March, April, May, June, July, and August. That gives us 6 months. That's why we have to multiply it by 6 months over 12 months. And we get a total of 8,160 rands. And that's what we record down there. And then what are we doing? Remember, we are disposing of the asset. So what we have to do on the debit side, we have to put asset disposal, and we put the total amount, which is 38,400 plus 8,160. We get 46,560. And that is all we have to do. So we close off this account, our debit balances with the credit. Then we move on to now the asset disposal account. Now this is where everything happens. We have the old asset which we bought for 120,000 rand. So we are disposing of this asset. So this is the same asset which we record, equipment, 120,000 rand. What is the next thing that we record? We have to record accumulated depreciation which we have just calculated. We'll put it on the credit side. Accumulated depreciation relating to equipment. Remember, we had calculated the accumulated depreciation. We had added together the depreciation for the prior years, this accumulated depreciation given at the beginning of the period of 38,400, plus the depreciation for the current period, which is 8,160. Now here it's just a typo. It's supposed to be 8,160. So we add the two together, we get 46,560. And that is what we put on our credit side. What is the next thing that we do? Now we know our debit has to balance with our credit side. We have to record the proceeds for the sale of the asset or for the disposal of the equipment. Well, we record bank because we received cash. It tells us here it was sold for cash on the 31st of August 2015 at carrying value. That's another important thing that we have to take note of. What did we sell the asset at? Did we trade it in, or did we give it away, or at what amount did we sell the asset for? So we sold it at carrying value. Now with carrying value, we know that carrying value is the total cost of the asset minus the accumulated depreciation, the total accumulated depreciation relating to the asset. So we have 120,000 rand minus 46,560,000 rand that we have for accumulated depreciation, which we had just calculated above here, and then we get a total of 73,440. That is the carrying value. Now again, if you go to the link in the description below, there's an explanation of accounting of depreciation terms, which also explain what the carrying value is. So check that out if you do not know what the carrying value is and what it entails. And then we put 73,440 because that's how much we sold it for, and that is what we have. Now we balance the debit and the credit side. They both balance, and that is how you do the actual asset disposal account. Now if you look at the three accounts here, we have equipment, accumulated depreciation on equipment, and the asset disposal. We see that the asset disposal cancels out the equipment at 120,000 rand, we can see here, and also cancels out the accumulated depreciation relating to equipment, the total of 446,560 rand and 73,440 rand. So that is how the accounts work with relation to the asset disposal. If this video has helped you, you can share it, you can like, and also comment below on any questions that you may have or any queries that you may have with relation to asset disposal. Till next time, cheers.